Okay, I want to do something a little different. I'm going to do a chart analysis and lay out a potential future trade that I see coming up on EVGO. Now, I'm just kind of riffing off the top of my head. I'm pretty familiar with this chart. I've spent years trading this specific stock. So what I'm going to do is just break down the market structure in the way that I see, or what I see, where we have been, and what I expect to come next. Um, Yeah, because the market structure will kind of give you an idea of the context of where we came from. So, since the beginning of this stock, you could argue, I mean, probably even draw it like that. So, we've been in this downward sloping parallel channel. Uh, I'll start it here because it makes more sense. This is kind of, oh, we just went public into the froth of the 2021 backdrop. So, anyway, this is what we had. This is the structure, the market structure up until we'll call this phase one. This is all phase one. At this moment, remember the number one rule of trading. It is what it is till it is what it isn't. It was what it was until this moment. At this vertical line, at this circle, you can see price broke out of the downward sloping channel. And what we got was an expression of that channel, right? Here, I should measure it a bit. You expressed the liquidity or the elasticity, as Rocky and trade spotting say, of that previous market structure when you broke out of it. I would call that phase two. At this point, when price was in the transition phase from what it was to what it wasn't, or now is, questions were being asked, right? The chart is asking questions. What is it now? What's going on now, right? And as you can see, we did it's structurally different at this point. Once you hit that peak, which I will just point out, the high right here was a golden pocket retracement, right? You can see that's a significant area where there's a lot of price action in the past. And that's right, that being confluent with the elasticity of the channel took us to, basically straight to $9 from a breakout at less than three. Now, what is happening is price is seeking support. At the same time, it's retesting the breakout, right? So if we were to extrapolate, ooh, that's a good straight line. Extrapolate that. Not, close enough is near enough, as Mr. Spotter always says. So we could consider this potentially a retest of the breakout. It looks like it's a fair value gap getting filled right here. And it's probably, let's just find out real quick. Yeah, 786 retracement. So there's a little bit of confluence with the fib there. Oh yeah, you can see as you lost to 236 right here, both of these times you had significant drops, although this one was brutal, 6 to 4. Oof. So you've got some confluent factors right there. Another, I guess now what I want to talk about now is the signal. So you phase one, phase two. Question is now what? Are we gonna see something evolve that is now, you know, are we gonna start trending upwards? Now, the main reason I wanted to look at this chart, I was just kind of giving a little bit of context there. Let's zoom in a bit real quick just to see there are things above us to target. We have a couple gaps. Tiny little gap right there up at what, 720 to 750. We got this big boy gap right here. Yeah, I was gonna say this has to have divergence on it. We can also see we've got one, two, one, two, two touches of divergence. on this daily time frame on these lows. You can see we had that what I believe is a swing failure. I could be using that word wrong, but what I mean when I say that is uh you have the lower or the higher low on the RSI, and then it escapes the bearish control zone. Um, so anyway, in my experience, that we can at least take that back up to the 50 period moving average and then assess from there. But taking into account the greater context of things, like the weekly signature here on the RSI, you can see we just got a shift of the direction of the RSI right here. What I'm going to do real quick now is I'm going to go back historically and back test what, how reliable is taking along when the RSI crosses over its own moving average. So all these vertical lines are going to represent the places, or are going to mark the area where the RSI crossed after losing its own moving average, finding a low, and then crossing back over. At that moment of the crossover from below, what did price do? In this previous market structure, phase one, as I labeled it, you can see that these moments of the RSI crossing, which is the purple line, crossing back over its own moving average with the 14-day look back in this case, the yellow line. You can see it was confluent almost every single time except for this one. We'll come back to this one, and I'll also draw it with a square. So it's a little, still I'll draw a triangle there. So anyway, it's consistently confluent with a touch of the bottom side of the channel. So the market structure gave you an added layer of confirmation that this signal, with this signal, because you're touching the bottom side of the channel and you're getting that cross back up. And I mean, in each of these examples that I've outlined, you can see we went to the top side of the channel, touching the top side, touching the top side, touching the top side, touching the top side, reaching for the top side, reaching for the top side, boom, busting through the top side, which you can see is significantly, this is way different than anything we'd had before. We just had brief peaks above, nothing really above the 56 right there. And consistent continuation divergence on those peaks. But the main point being the RSI crossing its own moving average is 100% backtest success. Now this one, it was from the center line, so there's a bit more risk. It never broke to the bottom, and it held the center line and made a move back up. So that that one was a bit riskier of a trade to take. But I would say that's not so well. It's good to keep in mind that there's the possible ways the signal can play out or what it can look like. But now you can see we got the slope change on the RSI heading towards the moving average. If you look at where I'm going to draw a horizontal line here at how low that RSI went, you can see it's basically as low as it's ever been. It's only really been lower once and slightly been lower 1-2 times there. Also, just throwing this out there, this chart is we're looking at 5 years of price action, or 4.5 years of price action here. So you have divergence on these lows. You're retesting the previous market structure. You're about to get the signal that has 100% consistency rate. You have the 50 period moving average above you, which is confluent with the fair value gap, I believe. Still learning how to work with those, but I think the space between this wick and this wick. So I think there's a fair value gap that fills in there. That's confluent with this. So $4 being one target, that's $3.95. You have on the daily 420 with a death cross. We could get a retest of that death cross and the 200 period moving average, which real quick, I'm going to draw a box or a rectangle around that area. And you can see this is clearly lots of price action in this area, right? So this is, again, a spot. I mean, even go there, right? So from 330 to 450, there's lots of liquidity in there. Historically speaking, there's a lot of action in there. So to see price come back from below and test it would not surprise me. You've got I should have done this in order. Sorry, it's a little scattered, but so this would be my first target, the 310. And then we're looking at the weekly at 4, which is, more of a range because you also have this cross on the daily. So that's the weekly 50, that's the cross on the daily. Those will both be targets. You have the bottom side of this gap, the top side of this gap, this higher gap up here. And if you're getting all the way up there, then I'd be looking basically just the previous highs, right? You'd be looking at that area, like these types of areas. Zoom in a little bit, just glance at what we got going on here. We did close at the 50. So risk is on right now, right? The proper entry would have been down in here, or the lower risk entry. But the main thing I just wanted to point out was there's things above us that we can aim to. We have this signal on the R side that's coming, or that's about to, iterate occur. And this chart's just kind of generally in an interesting spot. I've been watching this for years, and as you can see, it was a very regimented, I think you would call that a linear trend. And then we got that phase change. And the question is, what does it change into? Or is this just an expression of the previous market structure, and then we fall back in here and just keep going until, death do us delisted? I don't know, but I guess I should end this by dropping a potential trade on the chart. I'm going to drop two. I'm going to drop one. Oh, if I had to enter this right this second, then I'll drop the one that I would hope to actually take from where we find ourselves now. If you're entering this right now, I mean, you're really going to want to, or I would really want to run like a super tight stop. I mean, what I would really want to do is, maybe wait for the RSI to cool off, come retest the 50, put in some divergence on the center line. This is one that I'll be keeping my eye on because, you can't really predict the best entry, but you can just keep your watch that pulse, and eventually you'll get the signal. Depends on the kind of trader you are. Another option would be to just wait till you get this signal and until you get the cross on the RSI over its own moving average on the weekly. You'll miss some of the move, right? You probably would have gotten in on this candle. So, and on this one, right, it crosses over after 2 solid weeks, from 5:30 up to 7:30. So you can miss a significant, but it's a lower risk at that point. So depends on, careful front running the signal. Just manage your risk. I think there's some money to be made on this chart.